Hi, I'm Bruce Burke. I'm here. We're doing another session with some of the speakers that are speaking at the upcoming Fin+AI 2024 conference. I'm pleased to have Paolo Sironi with me today. Paolo is the global head of research at IBM's Institute for Business Value. Paolo, could you please introduce yourself and kind of give us a little bit of understanding as to what you do at IBM in your context?
So, Bruce, thanks for the opportunity to talk to your audience. It's really valuable for me. So, what do I do now? Formally, I'm the global research leader for banking and financial markets at IBM, the Institute for Business Value. The Institute for Business Value is the IBM research center that discusses how technology can sometimes inspire, definitely help to transform operations and business models across a variety of industries. And banking and financial markets is typically my major domain of research application. On top of this one, which is very complementary, I'm also running my branded personal research as a book author. I've been publishing 5 different books in the last 8 years on different domains, from quantitative finance to regulation, economic theory. They were part of an effort to understand how the business models of the financial services industries have to be transformed so that technology makes sense. Because you see, the point here is that technology is not something that you plug in and value is generated this time around. We are at the end of a long cycle, which is almost as long as a century, about how we are used to refine financial services. And it's time to change those business models to correspond to the deeper value that has to be created for clients so that the technology can effectively unlock all the value that technology can. Otherwise, a return on investment will not be generated. And this is concluded by my latest Amazon bestseller on banking books, Banks and Fintech on Platform Economies, as I redesign a framework to explain what is already happening, but most of all, providing a map and a compass to make sure that those which are going in that direction make the next right steps forward, so that every penny invested generates value for all of us, the clients, the bankers, the providers of technology, society, and the planet.
So, give us kind of a sneak peek at the book. What I understand it's about. And I grew up with platforms and technology, right? I've sold platforms, and not to the extent that IBM has them, right? My thing was centered around telecom and that sort of thing. But give us a brief synopsis of, set up the book for us.
Okay, so we're talking about banks and fintech on platform economies, contextual and conscious banking strategies. Let me explain first what does this book addresses. In 2019, Mario Draghi, at the time he was still the chairman of the European Central Bank, 2 weeks before he left office, was asked a question by a journalist if negative interest rates would create the next collapse of the financial system. Now, I know that interest rates have been going up. You need to contextualize the question. Basically, the question is if the complex monetary conditions, which are set by central banks, which are very unorthodox and different from the past, are going to create more trouble. Now, the response by Mario Draghi, that needs to be listened carefully word by word, because when central bankers talk, every word matters, is that unquestionably, banks would love positive rates, and we see, there could be an immediate benefit. But then he explains, looking at Europe in particular, the complexities of the cost-income ratios of banks. So basically says their economic model is not working anymore because costs are structurally sticking high and income is deteriorating over time. So then he says there's something more relevant than discussing the level of interest rates, looking at the structural weaknesses of banks' operations. And so he concludes, banks have to adjust their business models to get the benefits of the digitalization of financial services. Now, it doesn't say that banks have to digitalize. existing business models. You lift and shift on cloud, you plug in some AI, everything works and gets better. No. The focus is on the transformation of the business model, because the way banks operate and what's a business model is the way you get the money for servicing the clients, is not accurate and adequate anymore given the current economic conditions and our understanding of finance after the global financial crisis. Now, clearly, Mario Draghi sets the tone and points the finger to the business model, but it didn't get an immediate answer from his audience. Now, what I try to do is to provide an answer to his statement with these banks and fintech and platform economies. So look at how, given the essence of digital that allows to operate across ecosystems with different modalities by connecting the dots out of linear value chains into a higher level of interactions, how can that facilitate a shift of the bank business models that is fitting the real value of digital, and therefore what digital can do for the transformation of financial services? Now, how does that get revealed and therefore realized by the institutions that understand the principles? Well, there are two elements that identify the capabilities of financial institutions to exert market power. And that is basically being at best in leveraging information and communication. What is information and what is communication? Well, information is about taking all the data which is inside the core banking system. That means the adverse selection, how you define credit, are you worth it or not to get the money, or the information about the payment that you make. So all of the transactional elements enable me to understand you better if I know how to use that data, right, to basically personalize through the analytics my understanding and offering to you. And the data that is part of the core banking system is not anymore sufficient to justify the economic model of banks, because if you look, as I said, in particular in Europe or in Japan, banks that suffered such a low interest rate environments found themselves incapable of remunerating shareholders with core banking operations, payments, and credit after the price for risk. So all of the weaknesses were exposed. So now what is happening here is that you need to open up core banking, therefore let this information breathe differently into an hybrid cloud perspective, where you start providing that pieces of information to other parties on the platform economy that basically build contextual banking. So it's an embedded finance story. They leverage banking by connecting to banking through technology instead of visiting a branch to power up their client journeys outside the banking domain. An easy example, there is one of the most primitive, when you go on Amazon and you pay with one click, and if you don't like it, when you get the product, you can send it back and get the money back immediately. That's an example of contextualization and embeddedness of financial services. Without that, Amazon would be useless. You would not use it because you have to walk out your place, go to the post office, send the money. That would not work, right? So if you think about it, that is a super essential service that banks are providing to Amazon. Without that service, Amazon will not be able to operate. So by intensifying information, so learning how to open up core banking and allow other institutions to consume, you see that new business models are emerging that I define contextual banking. So that's one of the dimensions that I'm explaining in terms of how business models get transformed, and therefore how digital helps the transformation. But you need to identify those business models. Then I said there is another dimension, and these are the two axes of the banking innovation quadrant, a horizontal dimension, which is communication. And what is communication? Communication is me talking to you, is a relationship and a conversation that typically allows banks to position different type of economic rewards. That is fees for investment products and insurance contracts in particular. So information, the vertical axis, you have payments and credit, and then you have insurance and investing for the retailers, for the affluent, for the wealthy individuals. Now, there is a little issue here. How do you digitalize relationships? Because that is really based upon conversation among people. And therefore, there's way more so far understanding cases or discussions about contextual banking, so how to leverage information. Communication is instead something that leads you on the platform economy to understand that it is the rebuilding of the advisory network, so operating as a network, a platform of advisors, where you allow a variety of individuals to talk to more people, not necessarily in the branches, to deliver value for their planning in terms of business planning, personal planning, right? Everything which is around your financial life as an individual or an entrepreneur that defines the success on the communication axis. Now, last year, for the first time, we saw an extraordinary acceleration on the communication axis because while for the last 10 years we've been discussing data, cloud, right, opening up the infrastructure, the API economy, the communication was primarily human, but generative AI is now showing that language can also be leveraged at an exponential rate in order to reshape communication. Now, I'm not saying that technology is full to transform and replace the human relationship, and I will never say that. However, we are seeing this acceleration. So now, what we are seeing under our own eyes is the realization of the bank innovation quadrant that you find defined in this strategic book, which will have a long life. That is how business models are transformed by leveraging information and communication, hybrid cloud, data, and AI to change the way banks interact with their clients, and therefore how they are paid on the platform economy for those products and services. Because in the end, that's what changes. And if bankers don't understand that, there's no way technology will really, if you like, unleash the value that it can unleash. We just touch the surface, if you like, right? So I believe that those that can get it, they are the institutions or the fintech that can effectively, if you like, start running ahead.
So I believe the bank behind the Amazon payment system is Synchrony, if I'm correct on that. That doesn't matter. While we're talking about books, if you want to get Paolo's book, it's going to be, the link will be in the description below. It's on Amazon. It's a bestseller on Amazon. But while we're talking about books, why don't we shift a little bit and talk about your new podcast, which is very exciting, the Banker's Bookshelf. It's on Breaking Banks Europe, yes, and also any other place you listen to your podcast. Let's talk about that, because you just had your first episode, and I listened. It was very, very interesting. So expound on that a little bit, please.
Thanks for bringing it up. So first of all, what is Breaking Banks podcast? The Breaking Banks podcast is a family of podcasts that is the most attended and influential podcast family in the world. And as part of the Breaking Banks podcast family, we launched some years ago Breaking Banks Europe, which starts from Europe, but doesn't simply discuss European topics, as an international appeal and mixes and matches. Now, this year I decided to launch, as part of the Breaking Banks Europe family, a series which will produce one podcast per month. Every first Monday of each month, there will be a podcast released. And at the very beginning, I have to say, we are doing a bit more frequent to warm up the audience. And the response has been really amazing just for the first episode. What is the Banker's Bookshelf? Well, it's a space where I invite the book authors, the researchers, or the owners of publications that are most innovative and breakthrough in terms of pushing forward the way we look at the world and understand the functioning of the financial system. So every episode, there will be one or two individuals that worked on their research that discuss with me the findings and the logic behind the research process. So I believe this is not blah, 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 is our most interesting moment of critical thinking about what is really going on, so that we can better understand the banking present and its fintech future, which is not easy, of course, because everything is in motion these days. So I invite everyone to subscribe to the Banker's Bookshelf. In the first episodes, we already have Sanjit Chaudhary, who is the world famous author of Platform Revolution. He has been identified by Harvard Business Review as one of the top 10 thinkers in terms of business strategy worldwide. He's a must listen to. He discusses sandwich economics. Then I hosted the Director General of the European Commission for the DG reform that takes care of the structural reform of the European economies to discuss the digital finance research that they sponsored within the European Union. And then we have the Economies research unit talking about impact. Is a must listen to a podcast on banking transformation, The Banker's Bookshelf.
Great encapsulation. And if you want to know more about sandwich economics, make sure you dial into this. I learned a lot. I really did. It's really a fantastic podcast, and you really, it really kept my interest. I'm quick to turn something off if it isn't challenging and engaging, and this definitely was. And I really look forward to future episodes.
But you see, sandwiches are good to bite if you're not inside. So the point is, while all economic sectors are transformed on digital economy from vertically integrated value chains into horizontal layers, when we will have infrastructure, aggregation, and at the end, the deployment with the customers, it is important to understand how your firm, being your bank or fintech, participates or intersects into this transformation, the realization of horizontal layers, and defines its sweet spot into this new conceptualization of the way companies interact, given the power of digital interconnectedness. So that's what Sanjay Chaudhary teaches and explains with some cool examples that go around Stripe, for example, played if you are in the payment space. So very, very interesting.
So, IBM just released the 2024 global report on banking and financial markets, your Institute for Business Value, and the subtitle or the kicker topic on that was generative AI and banking. That was kind of the synopsis of the report. Can you talk a little bit about that report you released and how that fits?
Yes, let me make it very precise. So. Every beginning of the year, every January, I release the global outlook for banking and financial markets that, differently from other consulting firms, is not just telling you about the next 3 or 4 trends. You make those bets like banking analysts. They're good in January, they're not good in March. It's more strategic. Wants to discuss every year from a different perspective the economic model of a financial institution, because in the end, technology is there if it addresses the pain points of an economic model. So every year we take a different perspective. And this year's perspective is regenerate banking with AI. Of course, is AI, and of course it's generative AI because it's on everybody's table and in everybody's discussion. But as I said, as we always discuss the economic model, we are very anchored in this discussion. We're not fleshing out like a proclam, or mottos. It's really trying to understand where does this intersect the generation of value and which are the risks and the complexities that needs to be managed and handled. Now, the economic model of a bank is always around the revenue or the profitability. That in this case is more around the communication element. As I mentioned, is one of the most interesting. There are other aspects, but the one that I wanted to focus on, so the client engagement. The second is the cost and efficiency. As I said before, the cost income ratio of banks in the last 15 years remained pretty sticky, while revenues was going down. And so there is a problem here in Houston. And so the question is now how these new advances can maybe allow banks to see the economic perspective in terms of cost and efficiency differently, to effectively make those decisions that, allow them to transform. And the third piece is risk and compliance, because that is what a bank is. Now, I started my career in the 1990s as quantitative risk manager. For almost 15 years, I led the department that was taking care of market risk, counterparty risk, and the calculation of risks of the retail clients of the bank engaging with investment activities. And I do remember that when I started my professional journey in the 90s, banking CEOs were prouding themselves to say every banker is a risk manager, because the essence of what the bank does is to manage risks for themselves and for their clients. Now, I tell you, for banks to succeed in the transformation of financial services with AI, every banker must be an AI risk manager. Because what we're talking about here is a probabilistic technology. All of the AI methods, but in particular generative AI, is, if you like, heightening this understanding. That means it's not a set of rules that self-replicate themselves, which are easier to grab, but are more complex dynamics that are happening through technology that needs to manage after they are deployed to avoid problems like hallucination in particular and bias. So what you can find into this research, the 2024 Global Outlook for Banking and Financial Markets, is an approach to evaluate use cases that is not just Gen AI, there are 19 here discussed, but it's AI in general, that looks at this trilemma. The potential value needs to be identified even more than ever because it's probabilistic technology. But then there is a trade-off between value that you want to generate and complexity, as well as risk. Complexity is about your organization. So is your organization ready to be transformed? Because when you use AI to automatize processes and to change the way people work, people have to change the way they work. And that's never easy, right? There's a lot of attrition there, as well as is your technology ready? There might be banks which already have data mesh or data fabric. So for them, it's a bit easier. There's always complex to create data lineage that allows to create visibility, transparency, accountability in the AI process. And other banks that they don't invest there. So they are, much behind their capability then to control this technology. So not for all the banks, complexity is the same. And then you have risks. Risk is bias or risk is hallucination. Now, if you apply Gen AI to customer service, there's a level of complexity. But if you like, the domain of discussion in customer services is pretty defined, I can't access my account, I need to reset the password, how can I classify transactions? So you put it this way. But it will be different when you apply to financial advice because markets change every day, products are complex. So it's a very broader topic, a much broader topic. So the amount of risks that can be realized for excessive bias or hallucination is different. And therefore is the understanding of these three elements that allows you to direct the investments and find a solution so that you can manage it. So that's why if bankers don't learn how to become AI risk managers, they won't be able to move from plus AI to AI plus. That means effectively transforming their organization with AI. So that is something that you can find into this report. I can't plug into 40 pages all element of knowledge and expertise that I have, that we have, but I think it's worth reading as a good starting point then to engage into further conversations and regenerate banking with AI.
And so links to Paolo's book, Paolo's podcast, Paolo's report will all be available in the description below. and you can the report download, complimentary download. It's wonderful. I've looked through it. I haven't absorbed it all. I'm doing so many things, but it's a wonderful report, and I've spread the word about it. While we're on the subject of IBM and AI, and AI is nothing new to IBM. IBM's been doing AI for probably longer than any other major corporation has been doing AI. But recently, IBM co-created with Meta a AI alliance that now has, 50 major enterprise corporations, has, additional members and that sort of thing. But all eyes seem to be on ChatGPT and OpenAI and all this sort of thing. But Meta just released their AI into their WhatsApp application. You can chat with it there. It's in Instagram now. It's in their Messenger now. And in their glasses. Hey, Meta, take a picture. There we go. And I'll have I haven't gotten the beta yet, but I'll have the AI in the glasses, and I'm going to this event at MIT. So can you, that happened December 2023, IBM started this alliance with with Meta, and Meta, in my mind, as a social media company that controls, Facebook, Instagram, Threads now, WhatsApp. I mean, that's a lot of different properties. They have a tremendous opportunity to influence AI in the social sphere. More so, probably, I think, than any other company in the social sphere, including YouTube, because they have such a broad reach. So, can you talk a little bit about that partnership and how it came to be?
Yes.
And
Let me say a couple of things before we get into the AI Alliance, because when we talk about AI and generative AI now, we also talk about a hype, right, or a reality. So of course, markets accelerate, user expectations build up very fast, but beyond the fact that a bit of a hype is always there, there's something fundamentally different here, and that's what you just said. IBM started working with AI in the 1950s, right? So it's not that AI is something new as innovation that popped up all of a sudden, and then we are confronting ourselves with. During the World Economic Forum, the IBM Institute for Business Value co-published a report with Barclays, the research unit, the Economies research unit of Barclays, discussing AI productivity, and I was so kind and proud to join this research effort. And there we try to tackle this question. While productivity faltered in the recent years, so the growth of the productivity rate has been going down and down and down. Can AI and generative AI now allow productivity to shoot up again? So to answer this question, we look at the time series of previous innovations, like at the end of the 1700s, the light bulb was invented, but it took almost 100 years before that had a real impact on the productivity gain. But why? Because it took time for that technology to become mainstream. And the same happened with reduced, if you like, waiting time with the computing age. The computers were invented in the beginning of 70s, right? But it took until the 1990s until the power of the computing age was effectively realized. And after that, the productivity has been going down. Now, two considerations. The first one is that it can be that some of the digital technologies that create value on platform economies is not accounted for by the GDP, for example. If you remember the New Year's Eve in 2023, there was somebody taking a picture of the Champs-Élysées. 100,000 people, most likely, looking at Champs-Élysées, waiting for the year end and the celebration fireworks. Everybody taking a video with their iPhone or Samsung phone, right? Now, it was amazing and impressive. Now, all of those people were working for free because they were producing content on a platform economy. So that's why, again, thanks to Fintech on platform economies, it's important to understand the way platform economies intersect the transformation of behaviors and therefore business models. So maybe we're not accounting for innovation the right way today. So the iPhone is an amazing innovation, but the productivity rate did not improve in the last 15 years. But when it comes to AI, something is important. This is not new innovation. As I said, if the innovation will be new, maybe we still have to wait like 20 years or 30 years or 50 years before we realize that value. In reality, AI started as a process, innovative process in the 1950s, right? If you want to formalize it to be more like constructed or industrial-like. What we're seeing today with Gen AI is just an acceleration of the process, where the technology is becoming more accessible, though it's dominated by a few players, and way more flexible because of the way the foundational models are generated to power up different type of interactions on the technology. So now more than ever, it's important to understand the complexities of how these technologies intersecting changes in society and changes in the commercialization of the other products. That's why the AI Alliance becomes important, because it's a moment of coordination and discussion among different players, of which IBM, together with Meta, to develop and deploy benchmarks and evaluation standards for AI systems that are scaling up effectively, to build up more responsibility advances for the open foundations on across ecosystems. Now, we all know that, that's what Elon Musk is discussing, OpenAI might not be that open after all. Started open and closed up. So that's not secondary in terms of a consequence, right? As all companies are trying to open up, and definitely IBM is trying to open up way more than we were in the past. And that needs to be also reflected in the hardware. What we are seeing is a hardware revenge, I would say. When software went to the forefront, hardware sort of was sidelined. But already the iPhone demonstrates that there's power in the hardware, right? So now we have all of these new processors that are actually very efficient and are not just contradicting the Moore law in terms that we started to think that the Moore law doesn't exist anymore, but they are replacing the Moore law with the new law in terms of the capability to basically power up speed and acceleration on the AI framework. So this is one of the reasons why I do believe the AI Alliance, among the many activities and initiatives, is an important one.
I think I just saw, I think it was 430,000 100H NVIDIA processors that Mark Zuckerberg just bought from Jensen. 430,000 H100 processors. Anyway, and I happened to see, I don't know if you caught the interview where...
There would be a storming cloud.
Lex Fredman just interviewed Sam Altman. I don't know if you've had a chance to watch that video yet, but in the video, Sam said, I think we're going to revisit the name of this company, this OpenAI company. I think we're going to revisit the name and make a name change or something.
Let's say, maybe they will bring more transparency, which is effectively needed. But if I can say something here, and it's important, sure. And I don't know whether we've been observing this fully. AI is forcing something which is extremely interesting to me. All of my research that leads into the definition of business models and product economies is grounded on the theory and principles of financial market transparency that I elaborated and published in 2019, more or less, which is an essential foundation, because transparency unveils a variety of things on complex systems that allows to deal with the problem of complexity. Now, while transparency is a good principle in human relationships, I guess that people, many businesses could find their way around that. But when it comes to AI, everybody wants AI to be transparent. So everybody wants the business to become transparent, right? And why does that matter? It matters because if AI starts touching the core processes of a business, think about a financial institution, it transforms the way decisions are made. Those decisions become instant and scalable, across the board. Now, as I said, is about risk management of AI, right? Every technique has its own little loopholes or problems. And when they get realized, somebody needs to be responsible for those. So now, as technology becomes more pervasive, the level of accountability is moved up to the board. And now, what happens is the board ready to handle that level of responsibility? Well, to do so, because they will have to do so, you need architectures and platforms underneath so that you can relate to the problem. That's why in this work, we land with the discussion about the AI governance in practice, not just in principle. Because to me, it's direct parallel to the 1990s when banks started risk management, some building Excel spreadsheets here and there, good algorithms, but those that made it right build architectures to manage it all in consistency. So today I see banks here and there or companies plugging in this analytic that one, but not many are yet understanding how to build the platform and the architecture needed to build the transparency that fits the board discussion so that they are comfortable from a risk management perspective to move forward with digital transformation. So those banks understanding this and making the right investments are the banks that will make it happen. Why did I mention this? Think about OpenAI, because at some point, if you remember, the board ousted Sam Altman, saying that he did not provide sufficient reassurance to the board. Now, they never explained what the reassurance is, but if you think about it, it's exactly what I'm saying. Somewhere in their process, there's a risk piling, and someone needs to reassure the board about the concentration or realization of that risk. Now, things happened afterwards, which are actually extraordinary from a corporate governance perspective. So different boards may have different risk appetite or, if you like, comfort in managing these risks, but this is what is happening. Now, I guess OpenAI had to face also the realization that they might have accelerated without having necessarily all the means, my interpretation, my personal one, not the IBM, to manage the whole process. So that's why what we are saying here is super important. There's no free lunch, especially with AI. It is a professional process of investing and implementing that requires awareness and control points to be realized, if you like, with serenity. And so I hope that we can have this conversation at the upcoming conference, because it would be topical.
So in preparation of this, I read a press release last night from IBM, March 18th, it was dated, I believe. And it was talking about how IBM is partnered with NVIDIA now, talking about NVIDIA earlier, right? Has partnered with NVIDIA. And the article kind of pointed to that measured approach that you just discussed, right? The article opened up with a statistic, and I don't remember the exact statistic, but it was a very low percentage of banks that they understand that AI is going to be good for banks and generative AI is going to be great, but they haven't decided or they don't know how they're going to use it yet. And so that's why they're turning to, Paolo and IBM and NVIDIA, to a course of action, right? A plan of action that's,
In the global outlook for banking and financial markets, we surveyed the 600 banking executives worldwide of institutions with more than 10 billion of total assets who have decision-making responsibilities in data and AI. And what we found out is that while there is a 14% of banks that currently, thinking about Gen AI, not AI, which is a special domain, do not intend to apply generative AI, there is an 8% of institutions that are doing that systematically. That means they are working contemporaneously, being live or about to go live with the use case in all of the core business domain of the institution. And there is 76% of institutions which are, yes, working on a use case or live with a use case in generative AI, but very tactically. That means one might be here, one might be there. And when we looked at the data, we saw that effectively in the approach of these 76% of institutions, there's not a common path. To me, it looks more like maybe of 10 business units that are participating to the corporate action. 2 of them were more open to the topic and the others not. So they started where they could find a better interest. You see what I'm trying to say here? There's not real strategic thinking. Now, on the one side that says some are really thinking more broadly, and that's correct. So that is where you see already the value of thinking architecture and platforms. Others are working on that because they see the business imperative to do that, but still might not have realized and connected the dots from a board perspective on what it takes to make it happen. As I said, it's going to be a change it all, right? You need to move from plus AI to an AI plus. So you need to understand how that touches the business model. You need to have platforms and architectures to become an AI risk manager so that you can move forward with comfort. And I think that is not new. I remember I've been discussing this in the previous years, but it takes time for people to realize that. And now that everybody sees what is happening, that is when I believe the industry is making a realization moment, okay, or some are basically doing it. So they're now seeing what we've been saying for a few years, right? So pretty interesting times.
So I just wanted to say real quick, the beauty of this Riverside app that we're doing is actually recording on both ends, so we don't get those internet glitches. So after we're done here, just hang around for a minute, please, to finish the upload. So in saying that, let's draw it up here. You're a busy guy, and you've got a lot to do. I think that IBM is making all the right moves during this tsunami of, AI. It's in every headline. I mean, the letters A and I typed together in the last month has been tremendous, right? And it seems like you're partnering with the leaders, right? As IBM always has, and it seems as if Paolo himself is making all the right moves with the new book and the new report and the new podcast. What does it look like in the future? We're talking about we're doing this Fin+AI conference, right? And it's our tagline is redefining financial intelligence. And what does it look like? What's the real picture, Paolo? Well, you're talking about it. It took 10 years for uptake on this technology and that technology. What's the real reality behind Fin+AI?
So, very important question. And let me say first, I'm not one of those guys that tell you that they would be flying cars, that they become submarines. I'm not the one. I don't know what the future will look like because fundamental uncertainty is a structure. I prefer to discuss in case the conditions upon which a certain future can be realized, right? So it's a more sober conversation. And that's what you find in my literature and in my business research. Now, to answer the question, we go back to our central banker, because I like to blame the central bankers, right? So they're bigger shoulder than me. In 2009, Alan Greenspan, who is the mastermind of the systemic put of the Fed, was speaking in front of the Senate committee in the US that tried to understand why the financial system was about to collapse, and had to be saved. So Alan Greenspan said that he found a flaw in the model. And the senator there at the committee was a bit puzzled. What is a flaw in the model, right? Is a flaw in reality? What is this? So he explained, Alan Greenspan, that the model is a conceptual representation of reality. And if I had a flaw in the model, he said that that means institutions, central bankers, economists, thought that the world, led by finance, therefore economies, were working a certain way. But that is not so, because agents are not rational, right? So they don't even work in their own self-interest for survival. And markets are not efficient. So he said, I'm puzzled by the fact that this has worked for the last 15 years, and so it seems so. Now it's not working, and we don't know how to fix it. Now, that is another answer you can find in banks and fintech and platform economies, looking at how financial services will look ahead. Because if there is a flaw in the model, the first thing you have to do is to open up your reference framework. That's a book on openness, and re-identify the foundations. So re-identify the correct foundations of the functioning of financial services. So that's why I started and mentioned before the theory and principles of financial market transparency, because we are at the verge of a transformation that requires a real mindset shift, which is a change in the way we look at the way the world works and financial services work. It's like you are producing electricity with a carbon plant, and now you're asked to do that with a nuclear plant or a different plant. Wouldn't you change theory underneath? Otherwise, you get into troubles, right? So now we're pretending to digitalize financial services without changing the theory that explains the functioning underneath, or the definition of value, what value really is and has to be generated. And only by making the change, we can see the future to be realized. So now what I'm saying here is that if we understand those new foundations, what we will see in the future of banking 10 years from now and we are starting to see it anyway because there's a big push towards that direction, is the realization of these two platform strategies that I defined before, the contextual banking platform strategy and the conscious banking platform strategy. What is the difference? The contextual banking means that the opportunity to eliminate friction, like payment with one click, is what makes banking contextualize to generate new value. Again, I'm talking like a central banker now. Every word matters. If you generate new value, it means the value is not inside the mechanism that you're looking at. So it's not transactional value. There's a race to zero prices here. It's value of the overall interaction of the platform economy. So banks need to think not in terms of API economy in a traditional way. I have a bank, I get a service, I provide connecting points, I get money through those connections, and I'm done. No, they need to understand how they participate into the transformation of their business model. You have my book to understand that, or the research I published last year for the IBV on embedded finance, Create the Everywhere, Everyday Bank, which discusses those points about where the value is in the interaction on embedded finance and contextual banking with external parties. You have examples here of platforms doing that. Bradesco, together with us, that we supported them, launched an agri-farm platform to address 50% of the Brazilian economy. You only need one from SBI in India, created a marketplace with a digital wallet in the middle to basically interact with retailers and aggregate merchants around a full ecosystem. So those are examples of banks which are looking at the overall generation of value through digitals, not just the transactions underneath. But then on the other side, you have conscious banking, which is more like the transformation of a bank where the bank remains visible, because banks will remain visible. They will not disappear. Bill Gates was not correct, only partially wrong because he's a billionaire, so it cannot be fully wrong. He said that people don't need banks, they need banking, very so, but people also need bankers, because there are reasons why the relationship that is deep in communication is important. Now, what makes conscious banking is the need to demonstrate value. Think about sustainability. That makes banking transparent. That means conscious. So to discuss the capability of people to understand and eliminate the knowledge friction. Because it's very complex sometimes to make financial decisions that impact our future for so long. And right now, the system is not set for people to become more conscious about how they make their financial decisions. It's more selling than advising. And advising cannot be, a dressed selling. A dressed up selling needs to be effective, transparent advice in the interest of clients. And that requires a different interaction in platform economy and how advisors and planners organize themselves to talk to people. Now, these two elements are getting realized. Even in this case, you see emerging business model. Just think about the amazing transformation of Morgan Stanley from an investment bank into a wealth management institution that manages 1 trillion in 10 years of total assets. It's an advisory model on the platform economy. So not yet to the full extent that I'm discussing here in my literature, but we are seeing some institutions going in that direction. So that is how the future of banking will look like 10 years from now. The more institutions and regulators understand that, the faster we reach that future. The less they understand, the more complex will be and the more trouble we'll have to face with more failing institutions and, unsatisfied customers and so on and so forth. But again, these are the conditions and that's the future.
So this all just really just ties together like a Christmas present with a beautiful little bow on the top. I mean, it really all relates very well. Yeah. Well, that's what you get when you talk to experts, right? You get expertise. So we're going to close it up here. I know you've got things to do. Any plugs you want to give? Any last words that you want to, anything on the way out that you want to tell people about?
Well, what I want to say is the following. It's hard to learn new things. We all went to school. Most of us got a degree, and it was not easy, right? In many respects, there quite a lot of application and dedication. But it's hard to relearn things. Very hard, much harder. In a sense that, as Alan Greenspan said, we lulled ourselves into a certain view of the world. And we know that it's not really working as we expect. We all know that. We're not in the 80s anymore, right? Now, the biggest change in culture, which is required to all of us, is to learn how to relearn and relearn new things. And I hope that if you guys want to access some of the produce of my research, that's the opportunity we'll find in my Banks and Fintech or Platform Economies, the research that I published with the IBV, and even the Bankers Bookshelf podcast is the attempt to rediscuss what we believe or we used to believe is the world, and finding a different interpretation, which is the one that will enable us to move forward, being part of that transformation process. So it's not a discussion about AI first or cloud first or technology first. It's a discussion about our view of the world and the economic model in a way that we connect the dots to understand how we can relate to that to create something new. So not in abstract, but in practice.
Great. What a close. Fantastic, Paolo. Thank you so much for being here. Paolo's going to be our opening keynote speaker on, I believe it's October 4th. That's a Friday at Le Meridien in Dania Beach, Florida, Ile Bear. And I know a little Italian. And
thanks God it's Friday, this Paolo's keynote.
Yes, Chris Skinner the day before, he's doing in the opening thing, and we're going to have a ton of people there. It's really going to be something. We're trying to sell out the whole hotel and just have full run of the place and just have a Fin+AI party there for the weekend. Paolo, thanks so much. I look forward to your next episode of Banker's Bookshelf and hearing you in person at Fin+AI 2024. Thank you so much.
Arrivederci.
Arrivederci. Ciao.